The Toronto real estate market has shifted. Inventory is high, sales are low, and in September we moved into what is now officially a balanced market. What about prices? Well, despite everything I just told you, the average sale price in September actually went up. In today's video, we're going to take a look at the September numbers, and I'm going to show you how the month stacked up to the 8 previous months of the year so that you can see how things have been playing out. My name is Jason Bondy-Sawyer with the Bondy-Sawyer real estate team here in the city of Toronto. Now, if you learn anything from today's video, go ahead and hit that like button down below. If you want to see more of our videos, subscribe to the channel. If you want to book a call with us, you just do so in that first link down in the description. So in September, we saw a bunch of new listings hit the market, which is what buyers have been asking for, right? But the problem is buyers are not buying. Well, buyers are buying, they're just not buying at the levels that we would typically see in a September market. So the inventory is not getting absorbed at the rate we would typically see, and that is why we are in a much more balanced market than we have been in a while. So let's take a look at the sales and listings and see how the inventory story has been playing out so far this year. So on the upper left-hand side there, you see we're starting with January and we are working our way downwards throughout the year into September. And I've got September highlighted there in yellow. So to start off the year, we had 3,100 sales in January. And sales really tells us the story of what's going on with buyers, because that's buyers getting back into the market, confidently making offers and purchasing properties. Now, if you remember, in January, the Bank of Canada did increase the overnight rate, but along with that, they sent the message that they would be holding rates for the near future. So that brought some confidence back into the market, and that is why over the course of the first few months of the year, we do see the number of sales increase. So as you go down, you can see there in May, we had just over 9,000 sales. That was the peak. Now in June, they started to come down, and a big part of that is because in June, there was an interest rate increase by the Bank of Canada. In July, there was another increase. So that's two back-to-back, and that's where you can see the number of sales coming down. So buyers started to pull back a bit there in June. And then in September, you can see there was just over 4,600 sales. Now, typically in September, we see activity increase compared to what it was in the slower months of August. So I think a lot of us were surprised to see only 4,600 sales in September. Okay, so let's look at the new listings now. In January, we started out with just under 7,700, and sort of mirroring what happened with sales, you can see as the year went on, sellers got more confident in putting their properties on the market, and the number of new listings started to build. Now, the peak for these was actually in June, which is a month after the peak of the sales, at just under 16,000. July, we came down. August, we came down. We knew in September we would be getting more listings, but look just how many listings we got. Over 16,000. Quite a big jump from where we were in August, and obviously looking at the chart, the biggest month on record for the year. So moving over now to active listings. Now, active listings is different than new listings. Active listings is all those listings that are on the market at the end of the month. And you can see that those numbers were building month over month, just as the other two columns were. The only difference is this did not peak in May and June. So when sales and new listings started to drop off in July and August, active listings actually started to increase. So you've got 15,371 in July, almost 15,500 in August, and then look at what we had in September, almost 19,000 active listings. So way more active listings than we had for any other month of the year, coupled with very low sales as well. Okay, so let's move on now to months of inventory. And just to recap, months of inventory is essentially the relationship between active listings and sales. So what we do is we look at the last day of the month, we see how many active listings there were, and we divide that number by the number of sales that happened in the month. So in the case of January there, you can see we had 3 months of inventory. So what that means is if no other properties were to come on the market as of the last day of January, it would have taken 3 months for all real estate to sell out. Now, as we moved through the year, you can see that inventory really started to tighten up once we got into the spring. March, 1.47, April, 1.38, and then the absolute peak was in May at 1.32 months of inventory. So a very tight seller's market. And then when the rate hikes started to come in June and then July, you can see that number started to grow. And then of course, July and August, 2.93 and 2.93. And then you can see in September there, we officially crossed over into the balanced market territory at 4.07 months of inventory. Like I said at the beginning of the video though, even though we saw inventory start to really mount up in September, the average sale price actually increased. So I want to show you another chart here that tells us the story of how pricing has gone throughout the year. So you can see in the chart there, I'm bringing over the months of inventory numbers from the previous chart because those are relevant to what happened with prices. So starting in January, we're just over 1,038,000, and you can see that we had 5 consecutive increases in a row. January, February, March, April, and then peaking in May at just under $1.2 million. And if you look at the months of inventory, what was happening at the same time, you can see months of inventory was tightening up at the same time that prices were increasing. And that just shows you the direct relationship between those things. Because when inventory tightens up, there are fewer homes for sale, there are more buyers competing, we see more multiple offer scenarios, and we see those prices starting to climb. But in June, that first interest rate hike happened. You can see that the months of inventory starts to go up and the prices start to go down. Now in August, we were at almost 3 months of inventory, and you can see the prices came down to almost where they were in January. But look what happened in September. Months of inventory was now over 4. We're in a balanced market, yet prices took a jump up from where they were in August, putting it back at the level somewhere between March and April earlier this year. If you saw the video I did in August comparing the history of August sale prices to January sale prices, there have only been 3 times since 1996 where September prices were actually lower than the August prices. And one of the questions I was asking in that video is whether or not September 2023 would be the first time in many years where the average sale price was actually lower than what we had in August. And I said that a big part of that was probably going to be whether or not the Bank of Canada raised the interest rate in September. We know now that they didn't, and we can see here in the chart that September numbers were higher. So we're about a week now into the month of October, and it's going to be interesting to see whether or not sales stay low and inventory continues to build, or if sales actually start to pick up as the month goes on. On October 25th, the Bank of Canada is going to be having another interest rate announcement. So of course, that's something we're all going to be watching as well. As always, if you made it this far, thanks so much for sticking around to the end of the video, and we'll catch you on the next one.